gonna go ahead and break this stuff down, even though it's kind of like mid-market, but we've had some pretty decent things happen already. Uh, Fuck, we could have got in again right here. I just didn't get what I wanted to get, and then I ended up leaving my crib and later seeing it on the 1 minute time frame. But nonetheless, here's the scenarios I'm talking about, guys. So we're in a downturning market, right? What I think is the holy grail, or of course there's no holy grail to trading, but these scenarios here where you have a downtrending market and then here's a breaking market structure, right? Or a market structure should broke. In this case, breaking market structure because it's higher time frame. But here's that shift, right? So price is bearish, right? This particular retracement is over with. Okay. So here's a sweep of high, here's a sweep of the low, and then here's the dealing range, right? So now you study that dealing range and say what's the most probable areas in that dealing range that price could want to get to and reverse from, right? Okay, so obviously this area here, this what would be the breaker block, right? You see price trading into that. Now, of course, the whole range, right? But I'm taking the bulk of the volume, okay? So anyways, price trades into this fair value gap, which is aligned with this breaker, right? So that's kind of like smart money confluence, okay? So these scenarios, what I'm getting at is these scenarios are the better scenarios when price is retracing right back into a fair value gap on the higher time frame, and then when we can go to the lower time frame and we can kind of see that fractal form. So the storyline behind this is that, and of course, here's the if we go into 1 hour, here's that series of candles, right? And then here's the fair value gap inside, right? Which price pushes to. And notice how the bodies of these 1 hour candles never negate where this fair value gap begins, right? So we've taken out these short-term highs to the left, okay? And then once we come up here, actually you can already see it on the 15-minute, okay? Here's that series of candles on the 15-minute time frame, and then here's the fair value gap. We have equal highs here with this high and this high. Let me clear this out of the way. So here's that series of candles. Here's your fair value gap, right? Which price just kind of trades into this fair value gap and drops. It doesn't really get, just my entry was based on at least, I wasn't too concerned about it diving too deep in here because we had this buy side liquidity and then, this liquidity void here. But I at least thought that they would find fair value right here at this bullish candle right here. So we missed by a pip, and of course we're attacking these equal lows, which price did, right? And you can see the sell side, right, will cause price to reprice to some type of buy side liquidity pool. Now the liquidity in this case is the fair value gap, right? So you see this 1 hour fair value gap. Here's that same scenario. Here's a fractal of the bigger scenario. Right up here where price is tapping into this daily fair value gap. Here's the same scenario in a sense. Now understand if price does come up here, this would be a nice area to possibly short from. But anyways, we clear this, we tap into this fair value gap, right? Now what I'd like to see here, simply because if we would have cleared this high, then I would be fine with the failure swing and everything. Well, or I would look for the failure swing. Because typically when we have failure swings, I like to see a liquidity pool to the left run. Well, actually, on this time frame, we run this high, right? So I guess we could consider that a sweep, which is, yeah. So that's a sweep. So there is buy side liquidity above that little small swing point. All right. So once we get that, oh wow, see, this stuff is crazy. Alright, but so this is literally it right here, right? Here's that series of candles that I continuously talking about, right? So you can just bring it to the high, right? And then there's fair value gaps inside of here, okay? But ultimately, if you didn't like this, right, like me, I kind of wanted to see this short-term high run. Now, once price creates this low and then we fail to run that short-term high, right? Let's look on the 2 minute, 3 minute. Okay, right here, right? So we failed to run that short-term high, and then here's another series of candles, right? Is there a fair value gap inside of that? Yes, it is right here. Sorry about that. All right, so Jer 40 just cleared the low that I was wanting to see. So from here, I would consider shorting opportunities. I do like this here. So if maybe we get an optimal trade entry. We ran this high. So here's a failure swing. This would be the neckline of that failure swing. We've just cleared this low. But what I'd like to see is a retracement back up into the area. Sorry. All right, you can see the fractal form: short-term high, intermediate, and then short-term, and then now we're trading lower. So the direction is pretty much confirmed. And then we have equal lows down here, right? So at any rate, I'd just like to see price trade back into here right now. If we were to, and I don't consider this chasing a trade, but because we're clear about the direction. So even if it is a 1-to-1, it's very highly probable, right? And that's kind of like a 1 to 1.25. But if we look on the lower time frame to see, if I get some type of fair value gaps in here on the lower time frame, I'll take it. Which I'm not necessarily seeing. Maybe it looks like on the 3-minute, 2-minute. Has to be. No, still no. All right, right in here. Okay, cool. So this fair value gap here, right? I'd consider trading that. And my ego is far removed from the charts, so I do not mind placing my stop above here. And then of course I'm going to target this area down here. Okay. So that is 105. Gold is playing with my emotions right now. Alright, we'll worry about gold later. Yeah, so this would be a scenario where I would, I would say this is highly probable. But I would like to much rather see price trade up into this here because there's a fair value gap inside of it. And if we don't get it, we don't get it, right? But ultimately, this is pretty obvious in terms of price trading here, and then here's the market structure shift, right? And then we leave relatively equal lows here also. Let's go. Okay, back to oil. All right, so what I was explaining on oil, right, was on this time frame here. Here's a fair value gap, and then price trades into that fair value gap, and then we take out these relatively equal lows here, right? So they took out the high from here, buy side will reprice to sell side, okay? So you would have entered here with the stop above here, and then you target this for, I think that's about a 1 to 3, yeah. That's an easy 1 to 3. So honestly, today on oil, we should all be up 6R on oil alone. Gold has given me from this area, it's giving me it was about 2R, but I'm still holding. I did close a piece of the position at these equal lows here, but I really don't like the price action that I'm getting right now. So I may get hit break even. We took out this low, and then now it's acting like it wants to reprice back up into this area, which I'm not really liking at this point. But we'll see what we get. Euro USD, I believe it. Yeah. So Euro USD, these were the entries for Euro USD. This came at 445. You can see short term high, intermediate term high. And then once this low of this candle is cleared, then this is solidified as a true order block, right? And then all you do from there is you find your fair value gap, which is here, and this becomes your entry, right? And then you could have entered again here. This is why I sent this out earlier, right? Because you could have entered from here. Now typically we like to see price come into this fair value gap, but you won't always get that, right? Remember, you're not here to always catch the pinpoint entry. And then they actually took this low, and now we're repricing higher. So now we're in that London close window where it's 10:30, okay? And if you see this high cleared, which it is, and you could possibly take longs. And here's the area that I'm expecting to be around the long-term target. So potential longs on the euro, if we can trade back into this fair value gap, I would say we clear, price will come up and then clear out this low resistant liquidity pool here, and then maybe we do tap into the fair value gap here. Okay, pound USD. So you have a fair swing on pound USD. So maybe price will get into this fair value gap and turn around. But right here you have, here's order flow, right? Boom, boom, right, and price trades into that fair value gap right there, right? As soon as we clear that low, trades into this fair value gap right here, and then we go lower, and then we seek this sell side liquidity here. But I do think we'll come to this low, and maybe even lower. You do have S&T divergence. Let's look at DXY. All right, so DXY has taken out previous day's high. Pound has not taken out previous day's low. But the euro has taken out previous day's low, right? So that's why you kind of have S&T divergence between these two. JER 40, let's see what it's doing. All right, so it's inside of this area. Has not really given us what we want yet. And here's another fractal inside of that fractal, right? So if I look and see if there's any reason that it should want to go higher. Not quite. You dug inside of this area and responded. And then this would be the true order block. It led to a market structural shift. Enough equal low. So I'm heavy on price dropping down here. And then S&P 500, which was beautiful. I wish I could have held to previous day's low, because if you look, price has been taking out previous day's low every time, except for this day here, where this was Friday, NFP, so we got a bunch of crazy shit. And then we trade inside the range on this day, and then typically on days where you trade inside the range, and what I mean by inside the range is that this bar traded between, inside of this bar here. It did not take out a previous day high or low. Typically what you'll get on those days is more of a seek and destroy, or not necessarily seek and destroy, but you get both sides of the screen wiped out, right? So just kind of remember that, journal it, put it in your notebook, and pay attention to it in price action. So this is kind of the same scenario as pound USD, where I'm just I'm seeing order flow consistently built, and then you have this order block here, and then this whole thing is an order block, right? So I'm banking on when price comes back in here, which this is a fair value gap, right? They just fill it in completely, right? So my entries come when I see price trade back into here, okay? And then the 8:30 opening price is, where is it? Okay, 8:30 opening price is here. True day is here. We trade above true day, but I think NAS came to the 8:30 opening price. Yeah. So NAS went right to the 8:30 open and fell short. I don't really trade U30 that much. I only use U30 for just to spot S&T divergences. Oh, what I want to point out about this is you see this high at 6 a.m., right? It's taken on the S&P, but the same high at 6 a.m. on NAS, right? Which is why I was stating earlier that NAS was the weaker of the two. It was not taken out, right? Okay. And then this little, if you're familiar with the price delivery cycle, which everyone should be except for the guys who haven't had day one, here's that consolidation, expansion, taking out these highs, reversal, right? What comes after reversal, right? And here's price going back into a consolidation, right? So it's a fractal inside of a fractal. But anyways, consolidation, expansion, reversal. Here's the retracement, and now we consolidate up here, and then we go back into reversal phase, right? So you can find that price delivery cycle repeated over and over within each of these phases here, but it's all a fractal of this whole phase, right? And just understand we're in a downtrending market, so we would expect price to be making, to make lower lows. Okay. Now, if this were counter trend, we'd only be expecting it to push to maybe some type of internal range liquidity pool. But since it's pro trend, right, we can attack the external range liquidity pools, right? And then just remember that once price reaches internal range liquidity pools or internal range objectives, from the counter trend perspective, right, those counter trend sweeps such as this one will eventually become pro trend, right? Pro trend targets, which it does. Okay, so that's the breakdown so far for today. It's only Tuesday, second day of the week. Honestly, the first because we had a bank holiday. So I hope you guys are seeing how this stuff is replicated over and over and over and over again. Right, nothing changes. Okay. I think there was something else. I want to say maybe there was yeah. Here's a breaker, right? So here's a series of down closed candles. Price pushes up, and you see how price responds to this area, right? So it actually responds. So this is an institutional area right here. So we're responding to it, and then we trade right through it. So this same area, right, should be used as a resistance. Okay. All right. So that's all I got, guys. If this is not clear, if there's anything you don't understand, feel free to send me a message, and then we'll make sure we clear it up. Happy trading.